SoFi was just bought by the largest asset managers in the world. We see that Vanguard just increased their holdings by 4% in the stock. We saw BlackRock increase their holdings by 7% in the stock. We also saw State Street increase their holdings by roughly 10%. So the three largest asset managers in the entire world are buying more of the stock. Obviously, they're passive indexers. It's not the end all be all, but it's good to see. And we can also see at the Vanguard ETF, we recently saw some buying as well. So this is all really good news. Then we saw a 15% increase in Charles Schwab in their position in SoFi. So once again, the largest asset managers are buying more of the stock, which is very welcome news. Geode Capital Management, one of the large passive indexers out there, has had increased their holdings by 10% over the past quarter. So what I'll do in today's video is I'll go over the Wall Street analyst ratings. I'll go over some insider selling I saw from the company. I'll go over some Congress buying I actually saw at this company as well. And then we'll cover the financials. And then at the end of the video, I will give you a price prediction for this stock. So with that being said, let's talk about it. So we have 9 bullish ratings on Wall Street right now. We have 3 bearish ratings. So 9-3 in terms of bulls to bears, definitely signaling that general consensus on Wall Street is a bullish one for SoFi. And we can see that the most recent updates have been pretty positive. So we saw Piper Sandler maintain their neutral rating with the $8.50 price target. We saw Barclays initiate at equal weight, so basically pretty much neutral. And then we saw Truist maintain their buy just last month. Morgan Stanley actually upgraded the stock last month from underweight to equal weight, so now Morgan Stanley is neutral. And JP Morgan also maintained their neutral rating a couple months back as well. So overall, general consensus is a bullish one for this stock. And then with that being said, let's take a look at some of the insider selling that we saw from this company. So in Q4 of this year, we saw 421,000 shares be sold. This really doesn't concern me though, as the company is very new, right? We IPO'd in 2020. Whenever you have a newer company, it's very common within the first couple of years as lockup periods expire, those longer tenured employees start to sell down their shares. It's really just a financial management type of decision. It's not those employees saying that, oh, the stock is going to zero. It's just simply something you do when you're a long-term employee of a company that has recently IPO'd, is you eventually sell your shares because a large part of your compensation is based on those shares. So if a large part of your compensation is send your kid to college, you're gonna have to sell some shares to do that. So I think that's what we're seeing from this company. And then with that being said, let's take a look at some of the Congress trading. So we can see that there are roughly $1,000 to $15,000 in buying from Carper Thomas, which is a senator, a Democratic senator. So interesting to see there. It's actually the spouse of this senator had bought some more of this stock on August 18th. So they're down in this position, but it's always kind of interesting to see what the politician people are doing for specific stocks. Not the end all be all, but just thought it was interesting. And then let's take a look at the short interest for this company. So we can see that there are 13%. 13% of the float is sold short. We have 2.6 days to cover. For those that don't know, that basically tells you that it takes 2.6 days of average volume to cover the shares that are sold short. Typically, when we're looking for a short squeeze, we look for a number over 10. So this doesn't really imply a massive likelihood of a short squeeze whatsoever. And then with that being said, let's take a look at the valuation, or really I should say the financials. We're not going to look at the valuation because the company obviously doesn't make money. But growth has actually been quite positive for this company. So we see growth over the past year has been 40%, and then growth over the next 12 months is projected to be 36%. So good to see that there. And then EBITDA growth is at their forward EBITDA growth is 168%. So the company is growing very quickly. And then even their profitability metrics look pretty good. So they have a gross profit margin of 81%. For those that don't know, this is basically just revenue minus cost of goods sold. Tells you what a company makes for what it sells. So 81% is definitely a good number. It signals that this company can be profitable. And we do have a cash per share at about $3 roughly. So, about 40% of the market cap is in cash right now. And that's definitely a good number. But let's take a look more broadly at this balance sheet. So we have $2.9 billion in cash. We have $6 billion in debt. We have more debt than cash. We have $3.5 billion more debt than cash. And the only issue with this is SoFi is really burning money at an extremely fast pace. So we have net operating cash flow of minus $9.4 billion per year, which is kind of an insane cash burn. So the company is burning through cash. They're going to have to do one of two things: issue new shares or issue new debt, just to kind of keep the company rolling, because obviously we're losing money every year. We're losing money every quarter because this company isn't making money right now. So don't be shocked if you see, a new debt offering. Obviously, we saw what went on with BlackRock with that loan. Don't be shocked if you see new shares issue. Don't be shocked if you see new debt in the coming weeks. And then with that being said, let's take a look at the chart and give a price prediction for the stock. So we're coming down to test support at around $6.60, which is where shares had bottomed in November, October of this year. So we bottomed out at this level, and we also bottomed out at this level earlier this week on Wednesday's trading, or excuse me, Tuesday's trading session. So I believe is a really good support level to be at. This level had acted as resistance in the past in May and in October of last year. Past resistance acts as new support. We're seeing that here. We're seeing this stock hold. I believe the $6.50 level continues to hold. And we see a move higher up to the 200-day moving average at around $7.30. And I think we kind of consolidate around this 200-day moving average and this major support level. I think we kind of seesaw in between these two levels, and we end up being somewhat range bound for the stock over the foreseeable future. That's my prediction on the stock. Long term, I think the stock has the ability to move higher. It's just we have to figure out that debt situation. We have to figure out, how we're going to fund the future operations of this company. I know that BlackRock deal was a big part of that, but we'll probably see some furthering of that kind of capital structure play forward. So we'll see how that plays out. But with that being said, I hope you enjoyed this video. If you did, please leave a like and subscribe, and I'll see you here next time.